SoFi just dropped a new play, and the market is watching closely. They launched Level 1 options trading with no commission, expanded their alternative investment access, and locked in October 28th for third quarter earnings. Against that, valuation concern and macro pressure are creeping back in. Today, I'll walk you through each of these moves, what they tell us about where SoFi is heading, and where the real opportunity or risk lies. Hit subscribe so you can catch how this unfolds. This week, SoFi rolled out Level 1 options, covered calls and cash-secured puts directly from its Invest platform with zero commission and no contract fees. That's a game changer because it invites more active users into the fold. They're also hinting that future expansion may include options in IRAs and possibly even zero-day options. Now, execution will decide whether this is hype or value. Not all users will qualify. SoFi still signals that standard regulatory fees apply. Watch how fast adoption happens and whether options volume becomes a real revenue stream rather than a talking point. If it does, you'll see it jumping in the next earnings cycle. SoFi has been on a strong run this past year. Naturally, after big gains, you see pullbacks. That's normal. Some analysts now see recent dips as potential entry zones, especially near technical supports that have held in prior corrections. But with that optimism comes pressure. Everyone is asking, is the stock richly priced now? Some voices have already flagged valuation stress. If SoFi misses any major metric in third quarter, it risks giving back significant ground. What's interesting lately is how the market reacts to macro moves. On days when growth names rally, SoFi tends to follow hard. On soft macro or rate spikes, it tends to drop more dramatically than some peers. That sensitivity tells you sentiment is still fragile. One underappreciated angle with SoFi right now is how aggressively it's expanding into private markets and alternative investments. Through partnerships with platforms like Cashmere and Fundrise, SoFi is opening access to private funds that were once limited to institutions. It's a strategic, long-term move, one that could meaningfully deepen user engagement and position SoFi as more than just a banking or lending platform. It won't show big impact overnight, but when it starts contributing meaningfully, that's when multiple expansion can accelerate. Meanwhile, competition and regulations are watching. Custody, valuations, and disclosure in private funds are tricky to manage. SoFi has locked in October 28th for its third quarter release. Everything will hinge on one thing, whether execution backs expectations. Their earnings ESP is about 17.72%, a signal that Wall Street sees upside potential. To hold that optimism, SoFi must show strong membership growth, cross-sell metrics improving, and margin resilience. If they beat, momentum names will pile in. If they miss or guide weakly, even minor missteps could provoke sharp reversals. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. Is the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. SoFi's run has drawn more scrutiny from analysts. Some are already considering target cuts if growth wobbles. That's natural. Good stocks attract both praise and pressure. Regulation is another overhang. Expanding into options and private funds brings scrutiny. The SEC, FINRA, or other bodies might examine whether SoFi is handling disclosures, risk, and user protection properly. Any misstep there can spook investors. Add macro risk, where rate spikes, inflation, and credit stress can harm growth stocks, and you have a landscape where fundamentals must constantly defend valuation. SoFi just opened new doors. Options, private access, momentum, it's pushing forward. But the question is how many of those doors will turn into real revenue streams and how soon. If options adoption is strong, margins hold, and user engagement deepens, this is a breakout story. If any part of that fails, options usage is weak or costs grow faster than revenue, you'll see downward pressure. My bet is that this is one of the last clean inflection windows before third quarter. Position carefully, watch adoption numbers in the app, and keep eyes on margin trends. If execution pairs with innovation, SoFi's narrative resets. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.